Hello, dear traders. My name is Clara, and these are the main trading ideas for the current session. First, let's look at the situation of the United States dollar against the Swiss franc. On Friday, the United States Supreme Court overturned Donald Trump's broad reciprocal tariffs. In response, the United States president announced plans to introduce a new global import tariff of 15%, raising concerns about a potential renewal of trade tensions. According to Rodrigo Catril, a strategist at National Australia Bank in Sydney, the United States dollar is experiencing broad weakness as markets assess the implications of the court's decision. He noted that Donald Trump's tariff regime remains in place, but with increased uncertainty. At the same time, ongoing tensions between the United States and Iran are increasing demand for safe haven assets, supporting the Swiss franc. Reports suggest that Donald Trump is considering limited airstrikes against Iran. He also stated that a much larger attack could be considered in the coming months if diplomatic efforts or any initial targeted United States action fail to persuade Iran to halt its nuclear program. The United States and Iran are scheduled to hold the next round of talks in Geneva on Thursday, but uncertainty remains if negotiations collapse. Looking ahead, Friday's United States Producer Price Index data for January could provide important clues regarding the future path of United States interest rates. A stronger-than-expected reading may force traders to scale back expectations of Federal Reserve rate cuts, which could offer support to the United States dollar. Next, let's move on to the United States dollar against the Japanese yen. Global risk sentiment is under pressure following the decision by United States President Donald Trump to impose a new 15% global import levy after the Supreme Court ruled against his broad tariffs on Friday. This announcement has fueled concerns about potential retaliation and economic consequences stemming from disruptions in global supply chains. As a result, investor appetite for riskier assets is weakening, while demand for the traditional safe haven Japanese yen is increasing. Additionally, the broadly weaker United States dollar is adding further downward pressure on the United States dollar against the Japanese yen. The Personal Consumption Expenditures Price Index released on Friday showed that core inflation rose more than expected in December, reinforcing expectations that the Federal Reserve will keep interest rates unchanged in March. However, traders are still pricing in the possibility of 225 basis point rate cuts by the Federal Reserve later this year, following weak United States gross domestic product data, which revealed that economic growth slowed sharply to 1.4% on an annualized basis in the fourth quarter. This has pulled the United States dollar back from its nearly one-month high reached on Friday. Meanwhile, weak fourth-quarter economic growth in Japan is creating additional pressure on Prime Minister Sanae Takaichi to announce further stimulus measures to support the economy. Moreover, data released on Friday showed that Japan's key inflation index slowed to its lowest level in 2 years, reducing expectations of immediate policy tightening by the Bank of Japan. This, in turn, limits further strengthening of the Japanese yen, especially amid relatively low trading volumes due to a public holiday in Japan. As a result, mixed fundamental drivers are creating a cautious environment for the United States dollar against the Japanese yen, and traders may hesitate before placing aggressive directional positions. So, these are the main trading ideas for now. Thank you for your attention, and don't forget to subscribe to our YouTube channel.